What's up, guys? We're back with another Spearhead Portfolio review. This is the stock portfolio where I focus on high quality stocks, fast growth companies that I believe have large moats and also very big cash flows over time because cash flows drive prices. So, what's going on? What's the history of this portfolio? We have been through a lot. We used to be down as low as €1,000 at one point, over 10% plus 11%, I think. And now we have recovered fully and we're back. The highest point we touched was 7.5% up, and that was €750. Right now we're sitting at 600 open gains. I haven't locked in those gains. I have some locked gains in this portfolio. If you check this here, realized profit, my realized profit is almost €2,000, 1900. So we are doing good, we're doing well. After the market recovered, we actually played this very well because we didn't sell. Instead, we bought more at this point, and as the market was dropping even more, because I told you guys that I'm thinking long term. In 3 to 6 months from now, the market will probably be higher, and already in less than 15 days, the market is higher. And I believe it has more room to go, as you can see here on this small uptrend that I have depicted here. So let's go back and see what's going on. I have opened some new positions. I have invested more into old ones, but I didn't invest that much since the last time that I did a portfolio review. This is mostly new gains. I got the portfolio to almost 10K, and now this is new gains that we have because we have good decisions and invested in good stocks. So let's see what's going on though. Tesla made a big move, went all the way back to 240, but it's still in this small downtrend that I don't like. And I think this will take some more time for Tesla to break through. If you can actually notice it here, it's a smaller, but still you cannot unsee it once you see it. We have a small downtrend here that we need to break if we want to wind up higher. We have the 200 level, which is trying to hold as hard as it can, and we might use it as a potential buy buy position. But yeah, it still has even more room to go. So this is not such a safe position to invest in right now. That's why I didn't go from 2 to 3 stocks, and I'm still holding my position. I'm willing to hold Tesla for the long term. It's a very small position of mine. I'm willing to hold it for the long term. I don't mind, but yeah, it's not the best of the times to invest into Tesla right now based on the technical analysis from my part. Next position that I have, gold. Gold has been also through a lot. Let's talk about this one fast because I have analyzed it many times before. Gold has been through a lot, but it's sitting close to prior all-time highs. Its time will come. Its time will come. So it's a matter of waiting. It has a big market cap, so it will take time for it to move, and probably some bad events on a worldwide scale. But yeah, its time will come, and when it comes, it will rip higher by a lot. So I'm still waiting. It's still close to its prior all-time highs, and as the gold market moves higher, the miners, because I have actually invested into miners, will benefit a lot and will make huge moves over 35, over even 40. I think they will reach all-time highs when the time comes. Look at that. Because with the prior prices, the basically the stock price of this ETF was around 44, 45, and right now we are at 30. So this presents a huge opportunity for those that want to get a high exposure to gold for the long term. That's for GDXJ, the gold miners. But yeah, if you want to play it safe, just invest. What I would do, just invest directly into gold. I prefer to take some more exposure with GDXJ, the junior gold miners. Besides that, let's check the next positions of ours. Shopify. Shopify is a company that I believe, I have told you that already, will play out like Nvidia. But it will take its time, and we will have many ups and downs, the ebb and flow of the market through that. So I'm willing to hold through all of that because I have used the product. I like the product of Shopify. It's incredibly, you can make a store in 5 minutes. You can sell something in like 7 minutes. If you have your socials organized, it's very easy to use, to build a site, to build a commerce website and sell through that. They get a cut out of every sell that someone out of every order, out of every payment. So it's almost like a payment processor as well, on a smaller scale, but it seems like that. They have some new loan features. They have a lot of features for their merchants. So it's like a garden, and where all the bees go, and they make even more money. And as all those bees, basically the people, make more money, Shopify makes more money. So it's a nice business model. That's why it's selling on a premium. But yeah, I believe it will benefit Shopify stock price for the long term. So I'm willing to hold this stock. We had these huge all-time highs. Now the stock is down a lot, but yeah, it's trying to show some strength in the last couple of days. And the last earnings were very good. We held through that 25% move higher, and it was very nice. And I'm up like almost 200 euros on this stock. Next stock that I have is S&P Global. S&P Global also made this huge move. I would love for it to drop again and give me the opportunity to buy below 350, because those were amazing prices for the long term. But I was trying to invest in everything, so I didn't manage to invest that much into S&P Global. But it's a very nice stock that tracks mostly the S&P 500 for the long term. Like if we go to Google Finance right now, exactly now, and compare SPGI, which is S&P Global, to S&P, look at that. S&P, what we will see is that it tracks it fully. Look at that. For example, now S&P Global is selling at a more premium, at a small premium. Last year too, same thing, small premium. When S&P Global sells at a small premium, one thing you can do is sell your position to lock in those gains. But yeah, over the long term, as you can see, it makes sense to earn more by investing into S&P Global because it benefits more. Look at that. That's an insane price action compared to S&P 500. That's very nice. 7,000% up. And it's a company that exists since the 1900s, if I'm not mistaken. So yeah, we can see that here. Look at that, founded 1860. You think it's going away? It's not going away anytime soon. But yeah, S&P Global is a nice stock that I'm willing to hold as well for the long run. It's almost like investing into an ETF. I like it, an S&P ETF, but with better returns. And it's a kind of safe stock as well, because it has the indexes, etc. Besides that, our next position is MicroStrategy. MicroStrategy is right now touching all-time highs from the March 20 of 2022, like a year ago, and we're back at those levels, almost 500. The stock has almost reached a price of 500. That's insane. Oh, it has touched that as well. That's very nice for MicroStrategy. And the even crazier thing is that, as it seems, Bitcoin is holding as well. MicroStrategy follows Bitcoin a lot because it holds like 150,000 Bitcoin on its balance sheet. I think it's a stock that will create a lot of value for its shareholders over time, just through that, just through holding the Bitcoin. And if they manage to create a yield out of this Bitcoin too, it will be even crazier because we'll get a dividend or something, or just the stock price will rise even more. Or if we don't get a dividend, what will happen is Michael Saylor will probably buy even more Bitcoin, so the price will just get higher. So you can't escape MicroStrategy going higher over time because Bitcoin's fundamentals and the strategy that Michael Saylor has. So I like holding MicroStrategy for the long run. And right now we have made, sorry for that, we have made a great move by being in that stock for a lot of time. This, to be honest, is the position I trade. I use MicroStrategy to trade mostly, to swing trade it. And I have locked many gains that I have already have from MicroStrategy. And I use Bitcoin to invest directly from Binance into Bitcoin for the long run. But I have a small position here, just 3,000 euros, which is a nice position for my portfolio. As you can see here, it's at 29% of the portfolio. And the true gains that I've made from this stock, the locked in gains are almost like 1,000 plus euros, and I'm going to make even more, as you can see. How will Bitcoin act? I'll tell you exactly right now. I expect Bitcoin right now to, after this small consolidation, to make a move higher because it's showing incredible strength after this rally. I expect a small move higher for it to touch 39k, 40k before we see a small correction back to 30 or 32k. That's what I expect from Bitcoin right now. But yeah, the 200-week moving average is very lower right now, and it will take time for us to touch it again because Bitcoin right now is making moves. But that's all for MicroStrategy. I'm holding that for the long term. I might sell a small part of this position if Bitcoin touches 39 to 40k, so I can buy it lower. But it's a very nice stock to hold that I have made huge gains on. Mastercard is one of the only stocks on this portfolio that is negative right now, even though my average price is lower than the current price, maybe because of the FX return. Yeah, the FX impact is big on this one, but that's okay. It will go higher in the long run because MasterCard has huge cash flows and everyone is using cards in order to pay. We're going into a cashless society, so I have a firm position on MasterCard as well, and I'm willing to make that bigger. I'm willing to get that stock into 3 shares too. I like it for the long run. LVMH is in the luxury industry, luxury products, and as the poor get poorer, the rich get richer. Of course, either of those two, both of those two, will always spend money on luxury products, and that will make LVMH's shareholders even richer. I'm up 2% on this position with an average price of 691. I'm willing to make this one bigger too. Below 700, I like this stock. I like to hold this stock for the long run. I like the stock, as someone used to say. Now, 2 new positions on the portfolio, and we'll finish with those. ExxonMobil. The reason I bought ExxonMobil, as you can see here on the chart, is because oil made a huge move down. The way I see that, it's trying to set a base before the next rally that it has. Let's check the price range here to see how low it has been. That's a 25% move. That's not crazy. As you can see, that's a 27% move for oil. Is that the same? Oh yeah, it's the same. It's a 25% move. It's, as you can see, it makes those big corrections and moves many times throughout its price history. But what I expect from commodities is to go higher over the long run. This is a longer position and a dividend stock as well. So I will start building my position on Exxon slowly and yeah, hold it for the long run. And I think it fits well from the perspective of safety in this portfolio and from the perspective of dividends. But I like how it's shaping out. Look at that. 30% MicroStrategy. I like that. This is the one I want to lower. But as we get gains and then lock in some of those gains, I like the allocation that I have right now. Almost 30% MicroStrategy, 12% Shopify, almost 10% MasterCard, 8% S&P Global, 8% LVMH, 4% Tesla. I would like to hold Tesla at this percentage, under 5, and increase my allocation into MasterCard, LVMH, S&P Global, and those 2 new positions. That's what I would like to do right now. Those 2 new positions right now, ExxonMobil, oil will benefit a lot in the long run. Energy prices, I believe, are set to go higher in the next couple of years. And that's why I hold and start the position in ExxonMobil. And besides that, guys, Adyen. This is, I think, a company from Netherlands, if I'm not mistaken. Let's go and see. Adyen. Adyen is a Dutch payment company with the status of an acquiring bank that allows businesses to accept e-commerce, mobile, and point-of-sale payments. It is listed on the stock exchange Euronext Amsterdam. So it's basically a European stock that I like. It has increasing revenue most of the time. And as you can see, look at that. I like this chart. This tells you a story. 1.6 billion on 2018, and right now we're sitting at 9 billion. That's nice. With and the net income will follow because most of the time those companies benefit a lot from the e-commerce space. If you didn't understand already what this company does, it's basically a payment processor. For example, every time you pay, for example, Amazon, you pay, a payment processor gets a bit of that, gets like 1%, 1.5, 1.8, 0.9% of that. And that's how those payment processors make money. When someone, maybe a lawyer, sends you an invoice online, a payment processor gets a percentage of that. A processor gets a percentage of that. So that's how these companies make money. They basically make free money out of you, out of every transaction. And e-commerce is huge. It will, I believe, stay huge. And I would love to invest into Stripe. Stripe is another company, but it's actually private. If you Let's Google that so you can see. Let's go back to Google. Stripe is one of the best payment processors in my opinion. Its valuation 2023. Look at that. Its valuation has dropped a lot over the last couple of. Stripe capped its valuation internally on at least 3 occasions this year, and I think right now it's around 50 billion. But yeah, look at that. Now valued on March. Now valued at 50 billion, following a 6.5 raise, and its valuation has dropped, but I think it has touched almost 100 billion, 80 to 100 billion. And this ADN stock is actually very similar. If you go, you can check the company's page as well to understand that it's a processor. For example, look at the pricing. This is how you understand how much they make from each payment that they get. And the valuation of Alien right now is sitting around, let's see, I think it's around the 30s. Yeah, 30 billion market cap. I would love to invest into this company at those prices at 600. I believe this was a steal deal because it used to have these prices on 2020. I didn't get to because I just learned about this stock, but from my research right now, I believe it's the second best to Stripe. Stripe is the best, but it's private, so I can invest in it. So I'll get exposure to the payment processing stocks through ADN. That's my strategy. And I have already started my position. I don't mind about how it will act short term, but I'm willing to build this position for the long run. That's all for this video, guys. Hope you loved it. This is my Spearhead Portfolio review. I believe we're going higher. We might have some more small corrections, but yeah, I believe the future is bright. See you on the next one. Peace.